Ganapathi, what's going on? Top line growth isn't really coming about. In FY17, you've done a growth of only around 9%, or in fact, you've done a degrowth of around 9% after giving a good growth in the last few years. How is FY18 shaping up? Can we return back to growth? Can we do a double-digit growth?
In fact, thank you for having Trigyn. Over FY17, we have bucked the trend, if you will, and grown at about 9%,
9%, right.
which is somewhere near the trend line, if you will, and we've maintained the EBITDA. And on quarter, it's a 14% growth, and on standalone, it's about 4%. That is because the lower EAT is on account of dollar impact, and also there are 3 one-time costs, which you will see in the notes. That is because we've done a feasibility for a new project. And the great news is that on 14th, the NCLT will be hearing a final petition for internal restructuring. We had to pay for that too. And if that internal restructuring, God willing, goes through, the shareholders get into a zone for declaring dividend. And as part of growth, we also had to set up a new facility. These are 3 one-time costs that impacted the EAT in FY17. But then we have an advantage in the sense that, we are not affected by the headwinds in our U.S. operations. We hire only locals, and therefore some of the things that we hear do not affect our current scenario or for FY18.
Okay.
And we are we are against the run of play, if you will. We are also going ahead with our recruitment, and our budget for FY18 reflects a run rate which will be significantly higher than the trend line, very significantly higher.
So double-digit revenue growth, Mr. Ganapathi, is what we could see?
Yeah, we could. We have to do it, and we are inclined to do it. And I know growth, I reckon, could come through partnerships, collaborations, and could see a shift from project-based to platform-based initiatives. We are into data security, and fintech could be emerging verticals. And growth is expected to be backed by years of investments, and we are very confident that FY18 will will beat all expectations for us. And
can you throw a little more color on that, Mr. Ganapathi? Can you throw a little more light on that in terms of domestic orders? What's new? What are the long-term contracts that you guys have signed? And what can we look forward to over the next 6 months?
Yeah, domestic, we just began the quarter with a great win. We should have revenue recognition in the end of first quarter itself of FY18. This is a long-term contract for one of the leading banks, and NDA does not permit us to give more details, but it is a very significant win. And we've also tied up, and we are in the process of our business visibility includes presence into smart cities, amongst other things. Right. As I said, we are driving the growth with partnerships and collaborations. And more importantly, we have cash in a U.S. subsidiary, if you can see, and one of our directors has moved there to sit exclusively to drive inorganic growth in the current year. And we will maintain, if not grow by about 10-11%.
So these contracts that you've signed, this long-term contract with a leading bank, what kind of margins does it give you? Because your margins have been a little sub of 10% for a while.
I think, there again, the domestic, we have waited for a long time to get in. The patience has been rewarding. These margins are quite attractive, almost close to about 19 to 20%.
All right, Mr. Ganapathi, how much of your money currently comes from your domestic business? We're penciling a number of around, if you give a 10% growth, then we should be penciling in around 750 crores.
Mr. Ganapathi, dollar insular.
Right. Mr. Ganapathi, let me just get back to that question. As of now, how much of your money comes in from the domestic market? You're looking to grow that business to what percentage?
Yeah, right. At this time, about 95% is dollar revenue, and we are hopeful of change. It is our ardent desire and commitment to make it 70-30, 30 being non-US dollar revenues.
All right.
Okay, we leave it at that. Thank you so much for joining us and giving us